yale umesema Baba, yote ni kweli, maana pia wayasema kwa upendo. Yale umetenda Baba, yote ni makuu, maana wayatenda kwa upendo. Yale umesema Baba, yote ni kweli, maana pia wayasema kwa upendo. Nimejipata ndani ya upendo wako, umekuwa kwangu mapumziko. Neema yako Yesu yanitosha, nikiwa nawe mimi niko huru. Nimejipata ndani ya upendo wako, umekuwa kwangu mapumziko. Neema yako yalitosha, nikiwa nawe mimi niko huru. Yale umetenda Baba, yote ni makuu, maana wayatenda kwa upendo. Yale umesema Baba, yote ni kweli, maana pia wayasema kwa upendo. Yale umetenda Baba, yote ni makuu, maana wayatenda kwa upendo. Yale umesema Baba, yote ni kweli, maana pia wayasema kwa upendo.
We just worship the Lord. We just worship the King of Kings. We want to have good time to worship Him in this episode of a Sign and a Wonder. So far, we've come into the knowledge of finances. We've come into the knowledge of a very, very important area which many overlook to their detriment in the world of business, in the world of entrepreneur. I want to pray for you wherever you are tuning in. I want to welcome you, and I want to assure you that by the end of this episode, heaven will have spoken over your life. You will have also had a chance to lift the name of the Lord. I am so excited to welcome you on board and to tell you, I want to bring an introduction so that you prepare yourself, you prepare your questions. Remember, in our nation, Kenya, we have something we call taxation. And the people from the Kenya Revenue Authority, that is the arm that is collecting taxes on behalf of government, those are the people that are very, very keen in terms of your business. They are very, very keen in terms of your company. They are very, very keen in terms of VAT. We call it value added tax. So there are quite a number of things, and many are ignorant, and they are caught in between what we call in the military terms crossfire. They find themselves in the middle of things and they wonder what is happening. And many have had to close completely their businesses, their enterprises, because of lack of knowledge. That is one of the keys that I would want you to be very keen and to prepare your questions ahead of time, that as we go preparing the atmosphere for God to speak, even through the ministry of the word in the world of financial knowledge. I want you to be very, very keen. I'm reading one scripture and then we pick up from the worship ministry completely to the time when we come and we listen and we hear more on the preceding area of financial taxation, area of finances, area of dealings, entrepreneur. How do you do business? The book of Proverbs chapter 22 verse 29 gives us a leading, a curtain raiser. It says in Proverbs chapter 22 verse 29, seest thou a man, or do you see a man diligent in business? Do you see a man? The Amplified Version calls skillful. The King James says diligent. Do you see a man skillful and experienced in his work? He will stand in honor before kings. He will not stand before obscure men. The King James Version calls it diligent man. He says, seest thou a man diligent in his business? He shall stand before kings. He shall not stand before mean men. Challenging you that after this, do business diligently. Do a feasibility studies, do a research on the matter of what kind of company do you want to register, which kind of enterprise do you want to venture into. Diligence is required, and that is where you need to know everything about taxation. And for those of you who have not done the returns, the Kenya Revenue Authority will be coming for you if you have not done. And nowadays they give a long period up to all the way to June 30th. Don't wait for June. Can you do personal returns of pay as you earn if you are in employment? Do it early enough, because what we are doing is not for this year. It is for 2025. So you don't have to wait until the end that year. Don't wait for the last minute rush. You will not be diligent. And my prayer is, as you prepare your heart, also prepare your mind, prepare your intellect, your intelligence to be able to grasp everything that is coming on board. I want to pray for you. I want to pray for the business people. I want to pray for those who are venturing into the world of entrepreneur, that by the grace of God, may God give you knowledge, wisdom, and understanding in the world of business so that you move. I still encourage you that a day should come when the experience you gain in the marketplace or in the world of employment should be enough to shift you out into a person of venture, so that you have time by your side to serve God, to do your own things. My prayer is you should not be employed forever. That's my prayer. So that means begin to think of registering an enterprise in the area of your passion, in the area of your diligence. So apply diligence, know everything about financial world in the mighty name of Jesus Christ. I welcome you on board as we worship the King of Kings in the mighty name of Jesus.
Baba Sante, Yesu Baba, asante. Baba, asante. Kulitukuza jina lako, Baba, asante. Umenitendea, I am a child of God. I'm no longer a slave to fear, 'cause I am a child of God. I'm no longer longer a slave to fear. Cause I am a child of God. Oh, I'm no longer with the knowledge that we have slave to fear. Cause I am a child of God.
To welcome you once again to this program. I am a sign and a wonder from wherever you are watching us from. I hope and believe you are having a wonderful time. You have had a wonderful day, and now you are having a wonderful evening, or depending on where you are watching us from, you are having a wonderful morning, afternoon, whichever time it is. I want to take this opportunity to welcome you to this program, which is a sign and a wonder. This is the only program where you find great and elevating worship, and also information which is edifying and also very important and crucial to this life that we are living in here on earth. Therefore, I want to just ask you to take your seat, wherever, find a comfortable spot, and listen, stay tuned, and walk along with us, because today we are continuing in on a very important topic. We are in episode 8, and today we have had a series of financial authorities. And if we have dissected that topic so deeply, and we have got to a point that if you want to become a financial authority, there are key principles which you have to adhere to. And one of the key principles of our financial authority is safeguarding your assets, or safeguarding your wealth. And therefore, today we are looking at one of a very critical aspect of how we can secure our wealth, or how we can ensure that whatever we have worked hard for, or whatever we've worked diligently for, is well secured. And one of the ways is ensuring that you only allocate that portion which belongs to you, and you utilize it and keep guard of it. And then just a recap of what we mentioned last week is that when you earn income, that income does not entirely belong to you. As a smart person, you need always to know that. But if you are not smart, I cannot use a word greedy on you. If you are greedy, then you will assume that everything that you have earned is yours, and you will make a very serious mistake of consuming it all. And if you go that direction, then at a later date, you will have people knocking at your door for you to give them their share. And one of the people that you will see knocking at your door is the government. Because once you earn income, there is a portion which belongs to God Almighty. If you are a born-again believer, you already know that there is a portion which belongs to God. And then there is also a portion which belongs to government. And that portion which belongs to government is called tax. Tax therefore becomes a compulsory contribution. If you are coming across this word tax for the first time, tax is a compulsory contribution by every adult citizen of a country to its government. Why? Because the government needs to provide what we call essential services. What are the essential services? Essential services are common services which affect all the citizens of a country. Examples of these common services: one is healthcare. Healthcare is a very crucial service which is provided by government, and the government needs revenue, or needs income, or needs money for it to be able to do that. The second one is infrastructure. The third one is security. Those are just but a few of very essential services which are being provided by the government. and the government can only do that using revenue which is raised through taxation. And therefore, every adult citizen of our country must contribute towards raising that revenue. Now, what model does a country, for example, specifically our country, Kenya, what model do they use for raising this revenue? One of the ways is issuing of what we call a KRA PIN. If you're coming across this terminology for the first time, KRA in full stands for Kenya Revenue Authority. And Kenya Revenue Authority is the government agency which is charged with the responsibility of enforcing tax laws, or also for collection of revenue through taxation. So they enforce the laws which are formulated by the Kenyan government or through Kenyan parliament. And once they are enacted, every June we normally hear this, that there is what we call a finance bill. A finance bill is a set of proposed laws which are sent to parliament for debate, and later on they are enacted. Once they are enacted, they are no longer a bill, but they are a law. Now that law is then given to the Kenya Revenue Authority for the purposes of enforcement. Enforcement simply means for making it operational. And therefore, they are charged with the responsibility of collection of this revenue through the laws which have been set for the purposes of giving it back to the national government through the Department of the National Treasury, which is then in charge with the responsibility of apportioning it to every sector of our economy for the purposes of provision of goods and services, which are essential. And therefore, every adult individual in Kenya is issued with a KRA PIN. KRA PIN is an identification number which helps the government identify you for the purposes of tax, for the purposes of taxation. And therefore, once you are issued with a KRA PIN as an adult citizen, you are then charged with the responsibility of filing your tax returns. If you are coming across also that terminology of filing your tax returns for the first time, it means that once you have your KRA PIN, you are supposed to do a declaration and tell the government that this is the much I've earned, this is the much I've spent, and this is the profit that I made, and therefore this is the tax that I'm supposed to pay. And individuals or companies, which are also actually businesses which operate under companies, are also deemed by law to be legal persons. So therefore, under tax laws, there are two categories of individuals. Individual number one is the citizen of the country. Individual number two is the business operating within the Republic of Kenya. That one, any business operating within the jurisdiction of Kenya is also deemed as, or is viewed under law as an individual, or is viewed as a person, is treated the same way you are treated when it comes to matters of taxation. And therefore, once you pay tax as an individual, every other business operating in Kenya is also supposed to file and pay its taxes. What are some of the examples of the forms of businesses which operate in Kenya? Number one, you can run a business as a sole proprietor. Sole proprietor is an individual, is a person operating individually as a business. Number two, you can operate as a partnership, whereby 2, 3, 4 individuals or 5 individuals come together and jointly open a partnership or jointly open a business which they run together, and each one of them becomes a shareholder in that kind of business, or becomes a partner in that kind of business. The third form of business is a limited company, whereby a limited company is a separate legal entity from its owners, and therefore also you can come, nowadays you can open a limited company as an individual, or you can be 2 of you, you can be 3 of you, you can be 5 of you, depending on how you would want to operate. So those are the forms of business which operate in Kenya, and each business or each individual, as we have said, is issued with a KRA pin. So point to note is that once you register a business in any of the 3 forms which you have mentioned, you are supposed to also have a KRA pin for your business for the purposes of taxation. And therefore, once you are issued with a KRA pin, you are supposed to do declarations, or you are supposed to do filing. And filings depend on what we call tax obligations which you have. Now, we want to look at the various tax obligations which exist under our tax laws in Kenya. One of the very basic tax obligation which exists under your KRA pin. Now, under your KRA pin, you will have something which is called a tax obligation. So once you register as a taxpayer in Kenya and you are issued with a KRA pin, there is a default tax obligation which comes along with that, and that one is called income tax individual if you are operating as an individual, or income tax partnership if you are operating as a partnership, and or income tax company if you are operating as a limited company. So those are that is the very basic tax obligation which comes with your KRA pin. And therefore, once you are issued with that obligation of income tax company or income tax individual, it means that every once a year you are supposed to do what we call a return, or an annual return, to declare your income, and that income is subjected to a 30% tax. Number 2, you can have a tax obligation which is known as pay as you earn. Pay as you earn also falls under the income tax bracket. Pay as you earn is a deduction which is made from those people who are earning income. Just as the word goes, pay as you earn. So you earn first, and then you pay a portion of that money to the government as pay as you earn. That is a tax head or a tax obligation, which is called pay as you earn. This is for employers, not employers, but employees. Now, and this one is it is deducted in advance. For those people who are employed, it is the pay as you earn element is deducted from your salary far before you earn that salary, and it's the prerogative, or it's the mandate of the employer to deduct that amount and remit it to the government. So if you are earning, let's say, a salary of 20,000, actually the least amount for you to qualify to pay for this pay as you earn, you need to be earning 24,000 shillings and above. And actually there is a proposal in Parliament right now under this year, the proposals which have been presented in this year 2026, that amount needs to be pushed to 30,000. So if that bill sails through Parliament as from 1st of July 2026, it will mean that people will start, anybody earning above 30,000 are the ones who will be paying for pay as you earn, and everybody who is earning below 30,000 will not be paying this pay as you earn thing. And then another tax obligation which you can always find, it is called value added tax, and I think this is very common. Value added tax actually is called an indirect tax, and everybody pays. Once you go to the supermarket and buy something, you always pay this thing which is called value added tax. Value added tax, it means, as the word goes, is you pay as a portion of the value that you have added to a certain commodity or a certain service. That is what it means. And more, this one, all business people are given the prerogative of collecting this tax on behalf of government. How does this work out? because once you go and buy a product from the supermarket, there is a 16% element, and VAT is the value added tax rate in Kenya is 16% currently. So there is a 16% element which is normally deducted from the money that you pay. For example, you go to the boutique and you are buying a shoe which is worth 1,000. The price may be 1,000, but there will always be a 16% element. So you will find 1,000 divided 16% of 1,000, you find is about 160. So instead of you paying 1,000, you will end up paying 1,160 for the product. So this business person will collect that amount from various customers, and at the end of the month, VAT filing is monthly, unlike income tax, which we said is annually. Value added tax is filed monthly, and therefore at the end of that month, this business person is supposed to compute the amount of tax he has collected. And how does he do this? He will compute all his turnover, which is the sales, and compute all his purchases, whatever he has bought within the course of that month. Find the difference. If the difference is coming to 100,000, you will pay 16% of that 100,000 as value added tax. Therefore, that is also something which is supposed to be noted, that that is the third tax head which you will commonly find for every business person. The fourth one, now a question can come. I'm not a business person, maybe I am just employed, and I normally pay as you earn. But you have a side hustle somewhere, which is like a small business. You cannot then argue and say that since I'm paying pay as you earn, I will not pay any other tax. One individual can end up having multiple tax heads or tax obligation, depending on the level of engagements or number of businesses that this person may be doing. I want to quickly introduce another one which is which is commonly ignored, and many people find themselves in this bracket, which is this tax head is called rental income tax. And I'm bringing this because you find somebody is employed somewhere, is working na nyumbani maybe akona mahali hivi ameweka nyumba 2-3 ambapo ameweka tenants na anachukua rent, and that rent maybe it is some significant amount, let's say call it around 100,000. So there is this tax obligation which is called rental income tax. So if you are earning income of any nature, know that you are supposed also file and pay what we call rental income tax, which is capped at 7.5% of the gross rent that you are collecting. If, for example, you are collecting 100,000 shillings a month, it will mean that you will have to calculate and pay 7.5%. And remember, this one is gross. Gross, it means before you make any deductions. Maybe you have some expenses here and there, maintenance, you have a caretaker who you are paying. Maybe you painted one of the rooms, that's an expense. But that one is not allowable expense against this kind of income. It is supposed to be gross of what you are paid, what you have been paid. 7.5% of it is supposed to go to the government. And therefore, now to bring this into perspective, say for example, let me use myself as an example. Maybe I am employed somewhere. I'm working maybe, for example, for the government, and I have an obligation of pay as you earn, which is deducted by my employer and is remitted to the government. That is one tax head which I may have. And on the side, I may be having a business which I'm running. Say, for example, I'm selling shoes. And therefore, also on top of the pay as you earn, which I'm filing, I'm also supposed to file for pay as you earn, for VAT, sorry. And then on top of VAT, on top of the business I'm running, say for example, I have some houses somewhere where I'm collecting rent. So one individual, who is me, at the end of the day ends up that you have to file for all these things, all these sources of income which you are having. And actually this is where it gets interesting, because some of or let me call it many people find themselves that you are compliant on one side, but you have other revenue streams on the other side which you have not accounted for. And this is where now it is going to become more tough more especially this year, which we are in the year 2026. And that's why it becomes very important for us to disseminate this information as much as we can, for everybody to be aware about what is happening, so as usikuje kupatwa off guard, because many people, you find they have registered a business, the different forms of business which you have mentioned, and you have run your business, say for example, for 5 years, and you have been operating normally without anybody disturbing you, and you are just saying to yourself, hata KRA mimi mambo yake maybe sijui. And then on the 5th year, you find KRA coming to your door, and they are knocking, they are telling you, you need to present your bank statements, you need to present your sales records, purchases records, your expenses, something which you have never done. And then it becomes a big deal, because at that point in time, when they realize you don't have records, and actually this is a very important point that I need to make a note, that the worst enemy to any business person operating in Kenya right now, it is lack of proper records. Lack of proper records is the biggest undoing to any business. And therefore, as a business person, right from the day that you started your business, it is good that you always keep your record straight. Keep the records of your purchases, keep the records of your sales, keep the records of your expenses. These ones are very vital, because if you do not have them, then you will have given an opportunity, we call it a blank check, you will have given a blank check to the Kenya Revenue Authority, because at that point in time, they can just assess you any amount, or based on the information that is available to them. So therefore, it is very important that you always keep these records straight. And therefore, to illustrate why am I saying that this year 2026, the filing of this year 2026 is going to be very interesting. One, if you have noted, there is that option of filing nil returns. For the longest time, people have been using it and misusing it. Now, a person in Kenya is qualified to file for nil return when they completely do not have any income. If, for example, you are a student, or you are a retired person and you don't engage yourself in any kind of business whatsoever, you then can now file for a nil return when you do not have an income completely, and you can demonstrate from your bank statement that there is no revenue coming in. Those are the only people who are left to file nil return. Now, why has the Kenya Revenue Authority suspended the nil filers, or the nil filing? They have suspended it simply because they are doing an investigation to curb those people who've been filing nil returns, yet they are having or they have an income, and they have been doing what we call tax evasion. So anybody who has been filing nil returns and knows that from their bankings or from their M-Pesa statement, and actually Kenya Revenue Authority has gone a notch high. These days they have co-opted the services of what we call AI. AI is artificial intelligence, which is helping in the analyzing data and finding whether these people who have been filing nil genuinely. And there is very many data centers or data quotas which Kenya Revenue Authority has capitalized on to help them genuinely know that or establish as to whether people are filing nil return genuinely, or they have been evading paying tax. So this year is going to be very interesting, and it's going to be very tough. But there's an opportunity, because you can always do what we call an amendment. You can do your tax records, or you can do your books of accounts early enough. And if there is a portion of your taxes which have not been captured previously, you have an opportunity to capture them and file them, and you will be in good records with the Kenya Revenue Authority. So it is important that we have this discussion for you to have prior knowledge than to be caught in a crossfire, as our Reverend was saying earlier on. It's good that you establish this thing. You find that if I've been doing business, have I been paying what we call value-added tax? Have I been doing what we call corporation tax or income tax? Have I been filing it? Or if I registered for and I was issued with a KRA PIN, how far when was the last time I filed for my returns? And if I have not filed, what should happen? And therefore, these are the things which we are supposed to look at. And I know there are many questions which are burning, and we are going to have a session whereby we are going to respond to those questions. So keep those questions coming. If you have a question, you are there, you have a question regarding this topic of taxation, there is something for you which is not clear, or there's some guidance which you would want to be guided on a specific area. Maybe you've been doing business and you don't know what which tax obligation you have, or you have a KRA PIN and you don't know when last you filed, and you would want that one addressed. This is your opportunity to ask that question, and we will be so glad to answer you. So as we proceed, I want to let you know that for the finance bill of 2023 introduced something very, very interesting, which changed the way businesses used to, or the way business operations is carried out in Kenya. So the Finance Bill 2026 amended the Tax Procedures Act and introduced Section 23A, which provided that all businesses operating within the jurisdiction of Kenya must generate and issue what we call ITIMS invoices. So I was previously talking about documentation and why they are important, and now the government has taken it a notch higher because they want to have visibility of all business transactions taking place within the Republic of Kenya, and they introduced this something which is called electronic tax invoice. An invoice is a document which you are given after maybe you've purchased goods from somewhere, and then the one you have purchased from issues you with an invoice for you then to be able to pay them. That is like a tax receipt. A tax receipt is what we call an ITIMS receipt. ITIMS in full, it means Electronic Tax Invoicing Management System, which then helps businesses to issue tax invoices or receipts or tax receipts which are recognizable by the Kenya Revenue Authority, and they can be verifiable through that system which is called an ITIMS platform. Now, why was the government doing this? The government was doing this because previously you could get an invoice from any quarter. You could randomly go to anybody whenever it comes to, for example, filing of the value-added tax return, which is actually done every 20th of every month. So you can go to any shop or any business person, unamwambia hapa nipe invoice, hapa nipe invoice. So they wanted to centralize that system and avoid fraud, because many people used to issue or used to take advantage of what we call falsified invoices. Falsified invoices which could not be verified by any platform whatsoever. So the government introduced this system to curb that and ensure that everybody who is operating a business in Kenya is receiving or is issuing a valid or a verifiable tax invoice. So these invoices are now going to become important in this return for this year. Why? Because of this other amendment. So the second amendment, which was done by the Finance Bill of 2023, the Amendment of Income Tax Act, introduced Section 16(1)(c), which provided that every expense has to be supported by an ITIMS invoice. What does this one mean? Previously, for many businesses and many individuals who have been doing business out here, you can concur with me if you've been doing return. You've been declaring your sales, or that is your turnover, and then you deduct your cost of sales, which is your purchases, and then you get your gross profit. And then now you deduct what we call operational expenses. Operational expenses are things like trade permit, electricity, water, transport, staff income, and so on and so forth. And nobody has been querying that. Once you declare, they are allowed. and then you calculate, you get your net profit, and you pay your corporation tax, which is normally 30%. But now this year 2025, the filing that we are doing, and 2026, which we will be filing coming next year, this section has already taken place. This section 16(1)(c), which provides that all those expenses that you are claiming must be supported by this thing which we said in the first point, which is called by a valid e-TIMS invoice. What does this mean? Any expense which is not supported or which is not verifiable by an e-TIMS invoice is not going to be allowed, or is not going to be used as an allowable expense against your income. This way it gets tough, because many people, as I said, you do business, maybe you are a salesperson, you are selling some commodities, maybe you pay electricity, you never collected e-TIMS for it, maybe you paid your staff, you never declared their pay as you earn. Maybe you incurred some cleaning services, and there is a lady who came, or a company which came and cleaned your office or your working space, and then you paid them 15,000. You never collected an invoice for that. Those are significant business expenses to you. But if they are not supported by e-TIMS, it means that they are not going to be used as allowable deductions against your expenses. Going a step further is that even your inputs, that's the cost of sales, if they are not supported by e-TIMS, they are not going to be used as allowable deductions against your income. Now, I have had questions on this area. Even today, I was tackling this issue of inputs which are not supported by an e-TIMS invoice. So, and this one is affecting so much the informal sector. Or the semi-informal sector. For example, people dealing with milk, or people dealing with maize production, for example. And this is a very, very contagious problem right now, which we are facing as a country, because somebody, for example, yeye anauza maziwa and he's selling to a company, let's say KCC or Brookside or Daima, and so on and so forth. When they supply milk to them, for them to be paid, they have to issue an invoice. They have to issue an invoice for KCC or for Brookside to pay them. But for them, when they were producing this milk, they did not collect any invoice for their inputs. So what it will mean at the end of the month or at the end of the year is that they have a sale which is coming cumulatively, let's call it even to 1 million or 10 million, but they do not have cost of sales, which is the input. Because what does to bring it into perspective, it means that for you to produce milk, which you are supplying now to Brookside or to KCC or to Daima or to wherever, you need to have or you ought to have incurred significant expenses for you to produce this milk. Maybe, for example, you bought napier grass, you bought hay, you bought water, you consumed electricity for the purposes of grinding kusiaga hizo napier grass. Maybe you had somebody who was helping you, or two, three people who were helping you feeding the cows, and so on and so forth. And you incurred some money. But all these expenses of yours, none of them is supported by e-TIMS. So what KRA is doing right now, they are not allowing you to claim those expenses. And that is actually a problem to any business person. That's why we need to bring this information as early as now, so as ujipange mapema, usije kupatwa off guard. So these are the things which you need to be aware of, that starting this year 2025, rather the return which we are doing 2025, going forward, is not going to be business as usual. It's not going to be the usual way we are used to, but it is going to be a bit tough. But luckily enough, KRA has given a bit of window. They have relaxed those regulations slightly for the year 2025. For which we are currently filing. But now, subsequently, for the year 2026 going forward, there's not going to be any other allowance. So you need to be very thorough. If you are doing business and you are going to file for at the end of the year. And actually, there is no excuse for not filing, because there is now no going to be nil filing, unless you are genuinely not earning income. But if you are earning income, you need to be aware of your tax obligations. If you are in employment, you need to file pay as you earn. If you are in business, you need to file corporation tax and VAT. Or if you are under the regime of what we call turnover tax, which is 1.5% of your gross turnover, you also need to file that. If you have a rental income, you need to file for your rental income tax, and so on and so forth. So these are the things which you need to be aware of. I know there's burning questions which maybe you could be having, and we are welcoming those questions, and we will be ready to tackle them. In whichever area you feel that you need to ask a question, write down your question. You can send it to us via our social media platforms. We are live on Facebook at Dr. Mark Keitani. We are also live on YouTube, and we are live also on Oracle TV. Let your keep your questions coming. Type there, send us in your question, and we'll be glad to answer you. We are going into a short break. We are going to worship for a few minutes as you prepare your questions, and once we are back, we are going to answer your questions regarding all matters concerning taxation. Stay tuned. Wonderful, wonderful, wonderful. That was quite a powerful worship. Indeed, Mungu wetu ni yeye anastahili yote. Even whatever we are discussing here, is God who gives us the power to create wealth. It is God who gives, who puts government in place. It is God who has blessed us with a beautiful country as this one. And therefore now we are discussing matters which are our responsibility, what is our part, what is the part of government, how can we live a more meaningful life, how can we live a more fulfilling life, how can we sustainably create wealth which is are not going to be lost because of mistakes which we made, maybe because of mismanagement or because of an information which we missed and we end up becoming victims. It's better we have this information from the word go, and that's why we're having this very, very uncomfortable discussion. And somebody can ask, why is it that you're bringing it in this kind of a segment which is supposed to be a praise segment? Maybe we are supposed to be discussing matters to do with the Bible, but the Bible has also always advised us to be wise. We need to be wise, taking advantage of every opportunity we have, or making use of every time that we have. And actually, ignorance is no defense. That's why now it becomes very important as children of God, as a born again believers, spirit filled, who are going to heaven. But we need to be aware that before we get to heaven, we are still living here on earth. And the Bible still says that a wise person is the one who creates wealth, and which is the wealth which he will lay hand over to his children and to his children's children. And therefore, you cannot be that kind of person that the Bible describes if you are going to create wealth today and you ignore this element of paying taxes, and before long, KRA comes to your door and they end up taking everything, or because of interest and penalties, because of a business which you did genuinely, but you failed to take heed of these basic principles of maybe you paying taxes, maybe keeping records, maybe collecting this thing which we call e-teams, receipts, or invoices, and so on and so forth. And therefore, this will become a very disadvantage to you. And at that point, you will start blaming the devil. You will say, it's because of the devil that my business is going down. And actually, it is not the devil. It's because of you who failed to take responsibility. You failed to take action when you needed to, or you did not find the advantage of getting this kind of information. But right now, you have the benefit of getting this information, which I believe is going to be very useful to you. And I know that your questions are ready. So I'm going to open this session for questions. We are going to start with those of us who are in studio. Last week, you had burning questions, I believe. And today we have an opportunity. Luckily, our Reverend gave us an opportunity. Thank you so much. And thumbs up to Reverend Mark Itani with the wisdom that God has given him. He gave us an opportunity that we can have these questions aired out, so as we can have an opportunity also to answer them for the benefit of those of us who are in studio and those of us who are watching us from at home. So keep your questions coming. I've scrolled through Facebook. I've not seen any questions so far, but keep your questions coming. We'll be glad to read your question out, and we'll be glad to answer you as much as God will enable us. So keep your questions coming, and God will bless you. So we'll start with the first question. I don't know who will go first.
Thank you for the opportunity.
Yes.
I want to thank God for this program, because I think this is the most important discussion for this year.
True.
I may want to understand that, for instance, I am a business person.
Yes.
I have my sole proprietor business.
Yes.
I have my personal KRA.
Yes.
Do I need to file both returns for my personal and for the business?
Okay. It's good that you noted thank you so much first and foremost for your question. Now, I will be answering one question as we go to the next. So the first question that you have asked is that you are running a business as a sole proprietor. Now, something that you need to note there is that every sole proprietor in Kenya runs the business using their personal identification number, or they use their personal KRA PIN number. So when you are doing the return for your business, you are doing at the same time you are doing it for yourself, because they share what? The KRA PIN is the same. Now it becomes separated when you are operating your business as a partnership or as a limited company. So when you start operating as a partnership, then it means that your partnership business now will be issued with a separate KRA PIN number, which is now unique to the business. Or if you are operating as a limited company under law, under our Kenyan Companies Act, is deemed or is viewed as a separate legal entity from its owners. So if now you advance from being a sole proprietor and you become a limited company, you will realize that your limited company will be issued with a separate KRA PIN. And in that case now, you as the director, you become an employee of that business. But as at now, as per your question, you asked, you are operating as a sole trader. It means you are using your same KRA PIN with the business. So it will mean that from your income at the end of the year, you will have to compute all your profit. You deduct, actually you compute all your total sales. You deduct all your purchases. You deduct all your expenses, and whatever remains now is what you are supposed to file as income tax at the end of the year. Yeah.
And to my next question.
Yes.
Now I am in that business.
Okay.
You said that going forward, it's up to me as the business person to purchase my supplies from people that have tax, that are also
who are compliant. Yes.
Does it mean if, in my case, maybe
the
supplier that I'm buying from is not compliant to KRA?
Yes.
Does it mean that I cannot file for those expenses that have been incurred simply because I was not able to get the teams from the farmer or going backward?
Yeah, thank you so much for that question. I like it, because that is the situation which we are in, and I was asked a similar question as to what you have asked in the course of the day. Now, unfortunately, according to the way KRA has decided to roll out this issue, it has decided to roll it from up going down instead of down going up. What do I mean by this? They started compliance from those large businesses, and those large businesses now are putting that, let me call it, the weight on the smaller businesses. Now, if you are dealing with a big business which is already compliant, it will force you as the smaller business, that big business will make you to be compliant. Because as I said, and the example I gave, if you are a small farmer and you are trading with the Brookside, for example, you are selling maize or milk to them, it will mean that if you have supplied milk to Brookside, for them, before they pay you, you will have to issue them with an ETIMS invoice. You understand? If Brookside realizes that you are unable to issue them with an ETIMS invoice, they will not supply to you. Let me come again. If you are supplying to Brookside, they will force you to issue an ETIMS invoice to them before they pay you. And if they realize that you are unable to issue them with an ETIMS invoice, they will not do business with you. They will look for somebody else who is compliant. And therefore, if you, as the business person, you choose to do business with somebody who is non-compliant, know that that person is putting you in a disadvantage. Why? All those inputs that you have purchased from them, they are going to be disallowed. They are not going to be used as, they are not going to be allowed as allowable expenses against your income. Now you will find at the end of the day that you have a lot of sales which are which do not have expenses to offset, and therefore at the end of the day what will happen to you, you will end up paying a lot of tax, because they will tax you based on only your income, or based on your sales, because you are now missing the purchases element or the cost of sale element, and that's going to be a very serious disadvantage. It's unfortunate that it's happening like that, because our biggest proposal to Kenya Revenue Authority, and this is actually feedback if there is an officer from Kenya Revenue Authority listening to this, we don't have a problem. Actually, most of the population, most of our people, because we have an advantage of interacting with them on a daily basis, they do not have a problem with e-teams. The only challenge which we are having at the moment is on the rollout. How I wish that this information was first of all made available. We take enough time in sensitization of the general public, rolling out this information. Everybody aelewe e-teams ni nini, such that people don't start fighting it because they simply don't know what it is. First of all, let's make people understand what e-teams is. How is it beneficial? Because we know once this system is rolled out properly, it will be very, very beneficial to our country, because even our revenue will go up, and even in terms of service provision will be very, very okay. But the way we have rolled it out, it has already brought bad blood, because people first of all have not understood it, and second of all, whenever you start now, for example, you can be a business person and you genuinely want an input. Umenunua kwa mtu na unataka akutolee risiti, lakini hawezi kukutolea because once ukimwambia mambo ya e-teams anaanza kusema hiyo ni maneno ya hiyo ni maneno ya kasongo, mambo ya taxes, na hiyo maneno inaleta serious it becomes an emotive issue, it becomes a bit political, and it becomes a problem rolling it out. And therefore, if we could take a break on this first and foremost as a country, and we face it out, we segment it into phases, and then we start rolling out bit by bit. Yes, the big companies might be very compliant, but what happens to the small business? Because the largest portion of our economy is largely informal. And how do we get this informal sector to become compliant with these e-teams, such that kama wewe ni mkulima, kama wewe ni muuzaji wa mahindi, for example, you are dealing with the cereals or the millers. For you, the millers, before they pay you, they will ask for an invoice, and you are willing to issue them the invoice to them. But this maize, maybe you have collected it from a farmer in Kuresoi, or from Molo, or from Kitale, or from whichever part of our country, Kenya. And this farmer mwenye ako kwa shamba, yeye hatataka kukupea e-teams, because first of all, he does not have that information. This thing, he tells you, actually, mimi nimekuwa nikifanya hii biashara ya mahindi for so long, nimeishi nikilima mahindi hapa na nauza, na kuna mtu amewahi niitisha kitu inaitwa e-teams, and suddenly e-teams now is with us. How do you make them understand that this e-teams is not an enemy, is coming to help you even as a farmer? That kind of model, because now the approach is that e-teams nikikupea inaenda kuni expose kwa kasongo, na kasongo atakuja kuni tax, and nobody wants that. So it becomes, people start fighting it even before it takes operation, and this one now affects the whole chain going up. And this one has caused many people to suffer, and maybe at the end of the year, or at the end of this year 2026, for example, there are people who have done business, because at the end of the day people have to do business. This is the things which this is the kind of business which sustains them. This is the kind of business which helps them sustain their livelihood, pay school fee for their children, pay medical bills, have food on their table, take care of their children, and so on and so forth. So they have to do business at the end of the day. So if we push them that direction of e-teams, and we don't find a solution for it, of how we can do it in a sustainable way, or do it in a practical way, then it's going to push so many people out of business. And once these small businesses die, even the kind of livelihoods, many livelihoods are going to be affected. So the question that you are asking is a very pertinent question that how are you going to engage with somebody who is not compliant? The answer that I can give as at now is that it is very risky to deal with somebody who is not compliant with e-teams, because if they are not going to issue you with an e-teams invoice, it means you are not going to have the expenses or deductions against your income at the end of the day. What will that mean? It will mean that you are going to pay a higher tax, which actually may not be something which you have made, is not part of your profit, because now profit is arrived on when you minus your sales minus cost of sales. Now, if you are missing the cost of sales element, then you are going to be taxed highly. Yeah, that's the response I can provide as at now. But try as much as you can to trade with people who are already compliant, as we continue to engage the Kenya Revenue Authority to help us, because it's not your responsibility to be chasing people around to be compliant. It's the responsibility of Kenya Revenue Authority. That's why they are called an authority, and they've been facilitated by various mechanisms to help them make people compliant. Actually, they are the ones who are supposed to be going out there, sensitizing people, giving information to the people, and helping people become compliant. Unlike you leaving that burden to you to be chasing people around, issue e-teams, and so on and so forth, because you don't even have the resources to do that. Thank you.
Now, I have another question in relation to that.
Okay.
Now, suppose all of us comply.
Yes.
The supplier, the business person.
Yes.
How is the tax beneficial to a business?
Okay.
Is it making me get some more profit or what? And in relation to the same question, do we now have a governing body on prices? Because maybe I'll buy something, I want to sell it at a certain amount.
Yes.
And I need to pay taxes out of it.
Okay.
Will it not hike my prices of a commodity? And then in return, I'll lose my clients.
Okay.
Because my prices may be slightly higher for me to recover that tax amount.
Yes.
What is your take on that?
Okay. Now, those are two questions in one, but I'll start with the first element. How is, if everybody complied, how is that one going to be advantageous to us? First and foremost, for the longest time in our economy, a very small section of our economy has been compliant in terms of tax compliance. For the longest time we have known that watu wanalipanga tax lazima ukuwe ni kampuni kubwa ama lazima ukuwe ni biashara kubwa, uko na sales mingi, uko na wafanyikazi, wewe ndio una qualify kulipa tax. So what actually this government did, it did what we call tax-based expansion. Tax-based expansion simply means that trying as much as possible to bring more new taxpayers into tax-paying bracket. Now, what happened is that it brought even the smallest or the micro businesses into the tax-paying bracket. It means that even if you have a small salon at the end of the at one corner of your street, you also need to be paying taxes. If you are a mama mboga, if you are a boda guy, or if you are a whichever small business you are doing, you are brought into that tax paying bracket. And that's why actually they introduced what we call turnover tax. Turnover tax is supposed to be there to kufanya hawa wakulima wadogo, allow me to use that word, wazoee kulipa nini? Kulipa ushuru. Ili as the businesses grow, now they can get to things like VAT, income tax, and so on and so forth. Actually, a turnover tax, you just pay 1.5% of your gross turnover, and that is a final tax. You will not be asked again to file and pay for any other taxes. So it becomes very simplified at that level. So if all of us complied, first of all, it will cause our revenue to go up. And this is one of the only challenges yenye tumekuwa nayo as a country is that even if we pay taxes genuinely and it goes to government, there has been a problem of what we call management. And now this is the feedback we've been giving back to government. Why? Because it affects the tax paying morale of the taxpayers. When, for example, you have worked hard, you have done your business, you wake up early in the morning, you go, you do your business, you get your profit, you calculate it clearly, and you pay government money, alafu jioni kwa news unasikia 10 million imeibwa. You see, you know that part of that 10 million is who? Is my money. Yenye nili work hard, nikalipa na imefanya nini? Mtu amepotea nayo. Now that one affects morale. So actually, if it were our money, the taxpayers' money or the taxes that we pay as a country were properly governed, then it will be advantageous to us. Why? Your children will be going to school without you necessarily having to pay anything, because our taxes will be sufficient for capitation for the schools. Our children will be having school fee, not school fee, but food in school. They will be having uniform. They will be having books and all that they need to be comfortable in school. Our roads, you will not be hitting potholes as you come. You will not be scared of walking at the night because there will be enough security lights. The streets will be well lit. In terms of maybe medical care, you will be having no problem going to hospital because our money will have catered for medicine, paying the doctors, and so on and so forth. So you will be going to hospital and getting best services. And actually, there are countries who are doing that. That's why we are admiring a country like Singapore. Why? Because if you go there, what I'm describing here is what is happening there. Why? Because of proper management of their taxes. So paying taxes actually is not a problem. It's the best thing we can do for ourselves as a country. That we paid our taxes properly, and once we become all of us compliant and everybody pays their fair share of the taxes, service provision, tick, everything will be okay. Your business will be okay because you will not be hautakuwa unang'ang'ana na garbage. Maybe kama unafanyia biashara soko, the garbage, the drainage will be okay. Rainy seasons like this, the sheds will be properly done. You have no problem doing your business, and so on and so forth. So paying taxes is a good thing because it helps service provision na mambo ya wanabiashara will be excellent. You'll be doing business in a very good environment. The second bit of your question was what?
Now, the second bit of my question was, will there be a governing body to give direction on pricing?
On pricing.
Because how do you arrive at a tax?
Yes.
For instance, I'm buying a blanket at 2,000.
Okay.
I need to pay for that tax.
Yes.
And whoever is selling it to me has also put the tax.
Yes.
So myself, I'll go put my tax.
Your tax, yeah.
So will this same blanket not go up?
It will. Sure.
And then my clients will see that my prices are going up.
Okay.
In the process, I'll be losing my businesses.
Okay. Yeah, thank you so much for that question. That's so brilliant. Now, the truth of the matter is that right now we are operating under what we call an open market system. An open market system is a capitalist ideology whereby you can sell anything based on how you will agree between between the buyer and the seller. The government has very little intervention in that sector, and unless it is what we call regulated sectors. There are sectors which the government has not left open but has regulated them. One quick example of that kind of sector which is regulated is the petroleum sector. Petroleum sector is regulated whereby it is the government which has taken upon itself to be issuing them, and they normally call it the maximum price which you can buy of a certain product. Let's, for example, take super petrol. Super petrol, the government normally releases prices for that commodity every 14th of every month. There is a price change. If you are very careful, ukiona date 14, there is a regulatory body, a price regulatory body inaitwa EPRA. EPRA in full is called the Energy and Petroleum Regulatory Authority, which releases prices for fuel. So they say that this is the maximum amount you can buy super or petrol per liter. That's a regulated sector. But most of the sectors in Kenya, they are left open for what we call the open market system. That's why you can go to Gikomba and buy a duvet for 2,000 shillings and come with it to Nakuru and sell it for 10,000 shillings. And depending on how ulipata customer na mukafanya nini, mukakubaliana na yeye. Now, what KRA is interested with, you sell whichever amount you want. But now you need to provide for us documentation for the same. Why? When you go to Gikomba, you buy a blanket at 2,000 shillings, ensure you have an invoice for that. You come with it. You sell to somebody at 10,000 shillings, ensure you issue an invoice for that, 10,000. Now, what KRA will be interested with, it is what value you have added. That's why they call it value added. Now, the value added in that kind of transaction, which we have described, is how much? Is 8,000. The difference between 10,000 and 2,000. So they will not tax you on the sales amount. They will tax you based on the value you have added. So they will tax you 16% of the 8,000, which is the value added. And therefore, that's why they are so keen on the records, that you need to give us the sales records and the purchases records, so as we can establish the profit element. Yeah.
There's another question that I've just been thinking about.
Okay.
I don't know how it is. I've heard people say that you take that receipt,
okay,
and then it will lessen.
Yes.
How do we go about that? It will lessen your taxes while you're filing.
Yes.
With
yes.
the teams. How is that? I've never understood.
Exactly. Thank you so much once again for that brilliant question. So that's what I have been trying to shed light on. So this is how it works. Why is that invoice very, very important? Or why is that receipt that you are collecting very important? It will help you reduce your tax liability. It will help you reduce your tax liability. Without that receipt, you are going to pay a lot of money. What happens in our system, just to describe it, once you, or our system runs in two ways. There are two portions. There is side A, which is called the output, or which is called the sales portion. And then there is side B, which is called the purchases side, or the purchases option. Now, these things, they work hand in hand. And that's why we call it input-output system, whereby your output is what you have sold. Your input is what you purchased. So you find the difference, whatever the difference is now, or whatever you find out after doing the difference is what is called the tax payable. So if it finds that you have only one side and you don't have the other, it means you are going to pay a higher tax. That's why for every sale, you need to have an equivalent purchase, so as they can be able to knock out. They can be able to knock out. Now, to illustrate this, if you bought, if you have sold a handkerchief at 100 shillings, and you don't have a receipt of what of where you bought the handkerchief, it will mean that you will pay 16% of what? Of the 100 shillings which you have sold. But say, for example, you have sold a handkerchief at 100 shillings, and you have a receipt that, for example, ulinunua kwa Wajose na uko na receipt ya kuonesha ulinunua at 80 shillings. So how much is your profit? It is 100 minus 80. So your profit is 20. So you will pay 16% of the 20. You have understood how it's important. But if it finds that you don't have the receipt ya 80, itamaanisha utapigwa tax ya 100, which is going to be a lot of money on your side, and it's going to be a disadvantage, because sasa itakula mpaka profit yako. You will now start paying from capital, and actually you are not supposed to pay taxes on your capital. You are supposed to pay taxes on your profit. That's why it's very, very important to always keep your business records, all business records, up to date. Another, before I move out of that point, or of that question which you have asked, suppose, for example, you are a contractor, and your business majorly relies on labor, and wewe ushughulikangi na mambo ya kununua material sana. Wewe kazi yako maybe majorly is a service based or something and you rely on labor, you hire people who are supposed to do some kind of work. For example, you are selling this service to another company. That company, before they pay you, they are asking for an e-Teams receipt. So you have that sales element and they are paying you. And actually, also take note that the Kenya Revenue Authority right now, as an access, they can see your bank transactions. They, at any given time, they can request your banker to provide them with the information. And therefore they are able to know when you are being paid. So coming back to the contractor who is relying on service and most of his transactions are based on labor, what you are supposed to do for you to find deduct or to find expenses to deduct against your income, once you hire people, ensure that you take their KRA PIN and their IDs and always declare that salary that you are paying them. Even if that salary does not meet the threshold for pay as you earn, which is 24,000 and above as at now, ensure that even if it's below that, always be declaring it. So as you can be, it can be allowed as an allowable deduction as employment expenses against your income. Usipofanya hivyo, it will mean that at the end of the year unaweza kuwa umefanya kazi ya turnover ya 10 million na umelipa wafanyikazi tuseme 7 million, but hii 7 million kama iko supported that you have not declared in the system that nililipa wafanyikazi A, B, C, D, maybe nilikuwa na 20 staff, hata kama ni cash was, nikawalipa hii amount on a specific day. If you are not going to have that portion, then that portion is going to be disallowed and you are not going to be allowed to claim it. And if that happens, it's going to be a very big disadvantage on your side. Therefore, ensure that if you are an employer and you have staff, you are paying whichever amount, even if it's 5,000, 3,000, 10,000, 20,000, 30,000, 100,000, be declaring that on the income tax pay as you earn portion. And it's going to be of a great benefit to you when you are going to do your returns at the end of the year.
I think I have 2 more questions and then I'll be okay.
All right.
The next one,
yes.
The next to the last one.
Okay.
For instance, I am a director.
Yes.
I have a limited company.
Yes.
That means I am paying my taxes from the company.
Yes.
Now, as I'm paying from the company is paying for my taxes.
Yes.
I have a rental property. Am I supposed now to file separately?
Yes.
From
the limited company. Yeah. Okay, thank you so much for that question. She is asking as to whether you are a business owner operating as a limited company. And again, you as an individual now, you have a rental property somewhere which is generating for you something kidogo on your side, because we have been teaching ourselves here on creating multiple sources of income. So you are so much in order asking that kind of question. Now we are at the phase of safeguarding that income. After you have created multiple sources of income, you need to safeguard them. Now what happens is under the law, once again, under the Companies Act in Kenya, a limited company is viewed as a separate legal entity from its owners. So even if you are the director of that company, that's a different person. Under the law, it's viewed as a different individual. That's why it has its own KRA PIN, and at the end of the year or at the end of the month, it will have to calculate all its transactions and pay all the taxes due to the government as a person. You also, as the director, kama for example, you are taking an allowance from the company, wanakulipa for example mshahara, as the director of that company, you are also supposed to calculate your own taxes and pay. Kama wanakulipia pay as you earn, at the end of the year you are supposed to file your individual return kwa pin yako. And actually there is a difference between the company's pin and your company pin. Ukiangalia company pin mostly in Kenya zinaanza na P05 something or P00 something. But for an individual pin, it starts with A01 or A02 or A05 or something like that. So wewe ukisha malizana na hesabu za kampuni, unarudi kwako kama wewe director. na wewe pia ufanye mahesabu zako. Kama for example ulikula mshahara kutoka kwa kampuni, you will put na hiyo Excel ya kufilingi income tax of an individual iko na various portions. If you are you are an employee and you are earning salary, kuna portion mahali penye utaweka employment income. Kama wewe ni mkulima, kuna portion unaweka farming income. Kama wewe ni mtu unachukua rent, kuna mahali penye rental income unaweka. So you tabulate all those incomes uziweke hapo, and then at the end of the day utaweka expenses nini, hivyo vitu zote you will fill in. At the end of the day it will calculate now the tax payable, and then you will remit it. So having a limited company and the limited company is filing and paying its taxes, it does not exonerate you from also filing and paying for the taxes as a director, because you are two different people. I want you to take note of that. You are the business is on its own, and now or you are on your own. The only time you do them together is when you are operating as a sole proprietor. Yeah.
So in that case, it means one business person can be overwhelmed because he is paying so much from the same pocket. Yeah. Even if there is that separate of a different company, a limited company from the owner. I feel it's the government should consider.
Yeah, unfortunately, once again, our tax laws sasa ziko hivyo. The laws, the way they have been set like that, and I think it's because of separation of incomes. Because initially somebody used to deem that ukisha file mara moja inakava hizo zingine zote. But I think the government maybe noted that maybe people are taking advantage of that, and there is some income which is not declared, because one person can be doing so many things and may be having different revenue streams or income streams, and therefore that's why maybe they separated that, so as to ensure that all income is accounted for. And therefore that's why maybe if you view it like that, you can because a company is also allowed to own property. One thing you can do is to ensure that this rental property now is registered under your company, such that the company becomes the owner of even the rentals, such that once now you are filing for the company, even income ya rentals bado itawekwa under the company, such that wewe sasa ukwe separated from all these filings and so on and so forth, such that iache kuonekana ni kama ni double. So you can this rental property, you can when you are going to register them, maybe for example when you are going to buy the land ya kujenga hiyo rental property, usitumie KRA pin yako, because kwa land registrar they will ask for your KRA pin. So instead of issuing your KRA pin, you can give the company's KRA pin, such that the rental is registered under your company, such that when the filing is done, yote iende line moja. Yeah.
That sounds better.
Okay.
Now my final question, because I've been dwelling so much on the business part.
Okay.
Now let's go back to this mwananchi mwenye ameandikwa. They want, because I know there are many that have been filing nil returns.
Yes.
And this goes straight to those that are below the PAYE rate of 24,000 and below. Mm-hmm. They've been filing nil returns for so many years.
Okay.
Being that the law has changed, and beginning 2026, they'll be checking. I'm sure. We are going to get people who've been filing nil returns, and yet they've been adding 20,000, 80,000, and thereabout. Mm-hmm. What is going to happen to this group of people? Because I know there are many.
Okay.
Will they be penalized for the nil returns for the past years? Or how is it going to be?
Okay.
And then what are we going to be filing?
To be filing, okay. Thank you so much. Now, for those ones who are under PAYE, actually the employer is supposed to deduct that portion and remit it on your behalf. Now, and that one is done monthly. After that one has been done, at the end of the year, the employer is supposed to issue you with what we call a P9 form. A P9 form is a form which shows that tabulates your incomes versus whatever the employer has been deducting you and how he has been remitting it to the government. Now, your responsibility as an employer or as an employee is to go to the system or to go to iTax. You log in using your KRA PIN and your password. And then once you are logged in, you just do a reconciliation. Normally, the tax comes to zero. There is nothing you normally pay more above what the employer has been remitting for you. So you do a reconciliation and declare, and then you generate an acknowledgement slip showing that you have filed. But if you have not been filing, the system will impose a penalty of 10,000 shillings. Not 10,000, actually it's 2,000 shillings for non-filing or for late filing. So for those ones who have been earning salary and your employer has been remitting it on your behalf, if you go to iTax and try submitting a new return, the system will reject that kind of return immediately. Why? Itakuambia you have some income which you need to do what? To declare. So there is no possibility that kuna mtu amekuwa ki earn salary na employer wake amekuwa ki remit na yeye hajakuwa akifanya nini? Akifile ama amekuwa akifile ni return. There is no that kind of there is no that possibility. However, if there is somebody mwenye amekuwa ki earn salary ya below 20,000, 24,000 na hajakuwa akifile, the law according to Kenya Revenue Authority Act right now, it gives the authority it gives KRA a responsibility, or it gives it a latitude of going back only 5 years. So if tukiwa 2026, it can only query from 2021 coming this way. Past 5 years, they cannot be able to query. However, if you have not been filing and you realize that there's some portion of income which you should have filed but you did not file, what should happen, because you asked what can somebody do? Somebody is supposed to do an amended return. An amended return allows for you to capture the income which you did not initially capture. That is one. Another thing is, as at now, because if you are below 24,000 and you have not been filing, because there is no revenue lost, you see, there is that question of whether there is a revenue which was lost. Because the KRA will ask maybe this question: if you would have filed, how much could have you paid? It's still zero, isn't it? Because you are below 24,000. And according to the law, as at now, those ones who are below 24,000, they are enjoying what we call relief, personal relief, which is a cushion to them. Therefore, there is nothing they are paying at the moment. So therefore, they will ask themselves, even if we made you to file right now, how much are we likely to collect from you? It is still zero. So there will be no point of you of subjecting you to doing all those amendments and filing at this point in time. The only person who can be subjected to filing is the person who, wenye wanajua ukweli huyu tukimfanya file tutapata some revenue out of it. Maybe somebody who was 24,000 and above. Those ones will be subjected to filing for the purposes of revenue collection, because if they do not file, then there will be revenue loss. I hope I've sufficiently answered your question.
Yes.
Yeah.
Thank you so much.
Thank you.
I think I'm more enlightened.
Yes.
And I'm going to ask more if there'll come
an opportunity. We hope to have another opportunity for more questions. Now, before we close, maybe because we are constrained on time, is there any one question? Maybe we can get more one question before we close.
Thank you.
You are welcome.
Maybe I feel like I wanted to ask a question, but it's like it has already been responded to.
Oh, it has been responded.
But maybe I'll go direct and ask
Yes.
particularly.
Yes.
For example, the who are earning like 30,000.
Yes.
Did you say we are supposed to be taxed 16% or?
Okay. If you are an income earner and you are falling within that bracket of 30,000, the amount which you are supposed to pay, or the tax obligation which you are supposed to pay, is pay as you earn. Pay as you earn is for employees, for people who are employed and earning a salary only. But if you are not earning a salary, you don't qualify for pay as you earn. But if you are doing a business of buying and selling, maybe you are buying clothes and you are selling clothes, you are buying shoes and you are selling shoes, you are buying food and you are selling foods, or you are buying general merchandise, then you qualify for value added tax. You need to register for value added tax and be paying that value added tax, which is now at 16%. But for pay as you earn, it is on a graduating scale. There is a scale for every salary. For example, those who are earning from 10,000 to 20,000, there is a bracket for them. 20,000 to 30,000, there is a bracket for them, and so on and so forth. So for pay as you earn is for salaried employees. VAT is for general business people. Yeah. So that is how it is. I can see we are so much constrained on time. I want to just take this opportunity to appreciate you so much for those questions. I know there are so many other questions which we cannot tackle in one session. Taxation is a broad thing and it affects all of us. And that's why somebody said that the only two things which you can be sure about this life is death and paying taxes. So as long as you are alive, you will be sure of paying taxes. So it's better that you plan your tax affairs in advance, properly put your documentation in order, know what you are supposed to pay, so as you don't end up paying what you are not supposed to pay, or don't pay what you are supposed to pay. So it's good that you have this information properly documented, properly. If you want to get into a business, you want to register a company today, always have this information in advance before you start doing any business. And if you do this, you will be a sign and a wonder, because you will do sustainable business which will outlive you, go to your children and go to your children's children. So I'm looking forward that if we get another opportunity, the deadline for filing for this year is 30th of June, and make sure you file your return. If you have a KRA PIN, make sure you file your return before 30th of June of this year 2026, and this is annually, and be doing that. If you want to check whether you are compliant, you can always reach us, or you can look for a consultant within your area. But if you prefer to seek these services from us, my number is on the screen. I can read it out. My number once again is 0714-992-094. That's Dan Victor. I am a consultant in the area of tax. We can help you navigate through these things, and we can help you to get compliance. So having no further ado, I want to wish you a lovely night. Thank you for staying tuned. Thank you for joining us. And we are always here every Thursday, live on Facebook, live on YouTube, live on Oracle TV. You can choose to join us as we continue to praise our God, worship our God, and continue to have this educative segment. God bless you. I wish you a good night. I wish you a lovely time wherever you are. God bless you once again. Thank you. See you next week.
Amen.